Happy New Year, everyone, and happy first day of trading for the stock market in the year 2026. The date is January 5th, 2026. What you see on the screen are the closing prices of various exchange traded funds. The data and date range is from November 3rd, 2025 through January 2nd, 2026. The independent variable is the exchange traded fund SPY, which tracks the S&P 500 that's highlighted in yellow. And then the green bar at the top are various exchange traded funds that track everything from short-term government notes to various currencies such as the dollar, the yen, the euro, the franc, also commodities, which is USCI. There's oil, high yield bonds, and there's the VIX. So these are the closing prices of these various securities, once again, from November 3rd through January 2nd. So I ran a correlation analysis with the 2 months worth of data. Again, the dependent variable is highlighted in yellow in the top left part of the screen. That's SPY, which tracks the S&P 500. So the independent variables are in the B column here, and I highlighted the three exchange traded funds which have the strongest correlation with SPY. Number 2 is GLD, which tracks gold, which accounts for 38.01% of the variance with the S&P 500 over the past 2 months. Number 3 is HYG, which is a close third to gold, and that's accounts for 37.82% of the variance over the S&P 500 for the past 2 months. And number 1 is VXX, which tracks the VIX, and that accounts for 67.42% of the variance. So I wanted to take this data and run a multiple regression analysis. I did look at the relationships among the independent variables, and I looked at gold's relationship with the VIX, which was too strong. Ideally, I'd like to see an R square below 0.6, and this comes in at 0.86. HYG holds because that relationship with the VIX is less than 0.6. So I ran the regression analysis. The model is significant. And the percent of variance that the independent variables have, and that's VXX and HYG with SPY, counts for anywhere between 68.99 and 70.5% of the variance. The regression formula is SPY equals 94.61335 minus, that should be a 1 point, fix that, minus 1.78714 times the price of the VIX plus 7.954662 times the price of HYG. So this is the formula here. I'll leave this up for a little bit for you to report it. And at the close on January 2nd, and this is the prediction line with the formula here. So you can see I have the formula here. See what the predicted value is. And at the market close on January 2nd, it predicted that SPY would hit 690. It closed at 683. However, if we go to the close on today, which is January 5th, it closed pretty close to that predicted up value. So it predicted a rally at the close on January 2nd, closing at 690, but it came close. It closed at 687.7. That's what it closed at. It's also trading a little higher in after hours trading. Please take the time to read my disclaimer. Also, please like my video and subscribe to my channel to receive the earliest copies of my videos. Thank you very much and have a happy new year.